Hey there, it's Ryan Skaggs, and this is the Mortgage Minute. Thank you so much for tuning in. This channel is dedicated to everything real estate, mortgage, and interest rates, and we're going to dive into those interest rates right now. So, 2.87, exactly the same as we were last week, no change. So, we have seen that nice little dip down, but we haven't seen a change over week to week. We're still seeing some volatility, which I'd mentioned in the past. But actually no change from the average 30-year fixed according to Freddie Mac. I've got the link below. Go down to freddiemac.com/PMMS, and that is the weekly survey. While you're down there, hit that like button, hit that subscribe button. I would be forever grateful for the subscribe, and then click that bell icon to be notified as I'm putting out weekly videos on everything real estate, mortgage, and interest rates. So our topic today, and really dive into the meat and potatoes. When you're on that link down there, as I mentioned below, and you're clicking subscribe, is you're going to also see that it's going to say with 0.6 points or with 0.4 points or something. So what is a point? How are they? What's the definition of them? Should you be paying them? How do you know if you're paying them? We're going to talk about all of that as fast as possible here in just a couple of minutes. So let's take you onto the screen here. I'm going to give you an example to start with. I'm going to take myself away so you can see this. We've got a $400,000 loan, and I've got you three options. So A, B, and C. When we look at the A, B, and C, you've got 2.5 with 1 point. You've got 2.75 with a half point. And then you've got 3% with 0 points. Now, the definition of a point, I'm going to get back in so you can see it. 1% of your loan amount equals 1 point. So for a $400,000 mortgage, that's $4,000 is 1 point. So let's go back here and actually blow it all the way up. When you see down here below, you can see I've got the payment broke down for option A. I've got the payment broke down for option B, and I've got the payment broke down for option C. Now, in each of those cases, I have the cost of $4,000, the cost of $2,000, and then, of course, the cost of $0 down there at the bottom, right? So how I look at points, should you be paying them? We're going to talk about if you're paying them here in just 1 second. But I look at it as a break-even point. And that you can see, and hopefully I'll be able to do this. Yep, there we go. Break-even point. So if you save $105 per month, if you save $53 per month, what is the cost associated with it, right? So what's the cost associated with it? And then what are you saving? And what's that break-even point in the number of months? So in each of these cases, you can see, and I'll take you back over here now, 37.7 or 37.4, okay? So that's where we look at the break-even point. If you're going to be there for 37 months or more, then this is likely going to be a great deal for you, okay? Now, I caution in saying you just, if you're going to be there for 10 years and the break-even point's, 10 years or something else, that it's now still a good deal, right? Now, this is just my opinion. You've got to be able to get a loan estimate, be able to apply, be credit qualified to be able to get this. But with that said, I look at, and the rule of thumb that I use is anywhere 2 years or under, 24 months or under, and you've got a long-term look, slam dunk, pay the points, get that lower payment. If you've got a 2 to 5 year break-even point, that's the gray area, and anywhere over the 5-year period, I don't love it because so many different things could change. Maybe you need to take cash out and you want to put an addition on or redo something, or for those that have kids that are going to college, maybe you want to pull some money out. Maybe you want to go to a shorter term fix. As soon as you refi, those points that you paid in, they're gone, right? They are gone right at day one. They're an additional closing cost. Now, how do you know if you're paying them? So the way that you know is on the second page of the loan estimate, and I'm going to zoom right in here, right here at the top, origination charges, percent of loan amount, points. And it's going to give you like 1.0 points and then a cost associated with it. So this is the one and only chance that you're going to be able to see and say, am I paying points? All right, so this is everything about points. Put your comments below. Ask your questions. I'll get right back to you. Thank you so much for tuning in, and we'll see each other again very, very soon.